Hi, I am Dilip A, currently pursuing MBA in IIM Trichy. As part of IEP assignment today, I am going to talk about GST and its implication on Indian economy. GST is one of the GST and its implications. GST was launched on July 1st, 2017. It aims at one nation, one tax, one market. Consumers will benefit from lower prices due to the removal of cascading in taxes and efficiency gains. The trade and industry will benefit because of uniform single indirect tax throughout the country, seamless flow of input tax credit, removal of tax related barriers at interstate borders, reduced logistics cost, end to end IT enabled system, and minimal interface with tax authorities. The central and state governments will witness tax buoyancy and the tax collections costs will reduce significantly. Exports will become more competitive as goods and services will be exported without any taxes embedded in them. Make in India program will get a major fillip due to increased ease of doing business and protection from cheap imports, as all imports will be subjected to integrated GST in addition to the basic customs duty. All these benefits will add significantly to the GDP growth of India in the medium and long run. So, when was GST implemented? GST was implemented through the Constitution 101st Amendment Act 2016. Following the passage of Constitution 122nd Amendment Bill, the GST is governed by the GST Council and its chairman is the Union Finance Minister Arun Jaitley. GST seeks to replace 17 indirect taxes, 8 central plus 9 state levels, and 23 cesses of the center and states, eliminating the need for filing multiple returns and assessments and rationalizing the tax treatments of goods and services along the supply chain from producers to consumers. Under GST, goods and services will be taxed at the following rates: 0.25%, 5%, 12%, 18%, and 28%. There is a special rate of 0.25% on rough, precious, and semi precious stones, and 3% on gold. So, what are the implications of GST and how it impacted corporate entities and their operations? The new tax regime will force many companies to restructure their operations. Companies will now insist to vendors and suppliers to furnish invoices, as GST will make it impossible for firms to evade taxes. Big companies stand to benefit as they have a supply chain in order and can offset taxes paid on inputs. Smaller firms may end up spending more as compliance costs will rise, while the impact on companies varies following existence of production units in the excise exempted zones. Implementation of GST should result in cost savings in the supply chain network and expedite a shift from unorganized trade. So, what is the benefit to the states? So, the compensation given to the states. As GST is a destination based tax, there was apprehension among some states, particularly manufacturing states, that implementation of GST may result in loss of revenue for them. Therefore, the Constitution 101st Amendment Act 2016 provides for compensation to the states for loss of revenues arising on account of implementation of GST for a period of 5 years. Based on the recommendation of the GST Council, the GST Compensation to States Act 2017 has been enacted. The Compensation Act has fixed the revenues of the years, and further a nominal annual growth rate of 14% has been provided. The Act provides for levying of cess which shall be used for compensation to the states in case there is a loss of revenue. This cess shall be levied on luxury items and goods. So, what is the final conclusion of GST? The launch of GST in India with effect from July 1, 2017 is a transformative reform and will change the way businesses are done in India. All stakeholders have welcomed the reform. The new GST regime will bring in more and more businesses into the formal economy. A radical change of this magnitude is bound to bring about some pain. However, the tax administrations, both at the center and the states, are working hard to ensure that the transition is smooth. The gains of this little pain are going to be many and long lasting for the Indian economy. However, finally, what I would like to conclude is India has jumped rankings from 133 to top 100, and especially in ease of doing business. This shows that GST and demonetization in India has provided a positive impact on Indian economy. Thank you.